Tough news for XRP holders today. It seems like there are still a few hurdles to clear over at the SEC. While I didn't expect all the challenges to disappear overnight, especially with the change in administration, it's clear that things are shifting in the right direction. Paul Atkinson has stepped in as the new SEC chair, replacing the previous leader, Gary Gensler. It's a positive step forward, but it looks like there are still a few roadblocks, or let's say bumps, in the road that need to be worked out. Hang in there, XRP community. Big news from CoinDesk. The SEC has put a pause on Grayscale's large cap fund conversion for further review, just a day after it was approved by their staff. Let me catch you up. Yesterday, the SEC gave the green light for a fund conversion that includes XRP. This conversion would turn the fund from a trust into an actual ETF. Why does that matter? Well, with an ETF, anytime someone buys into the fund, the company behind it would also purchase XRP. That's huge and exactly what we've been hoping for. Essentially, it would function just like a spot XRP ETF. So here's the deal. It's a multi-coin fund, which got approved yesterday, but now it's been halted today. Weird, right? Let me break it down for you. Oh, and at the same time, the SEC is allegedly, and I think this is probably true, working to speed up the approval process for cryptocurrency ETFs. Here's another twist. There's a new headline saying the US regulator is considering a simplified path to market for crypto ETFs. So on one hand, they're slowing down a multi-coin crypto ETF fund, but on the other, they're trying to make it easier to approve crypto ETFs overall. It seems a bit contradictory, but maybe there are still a few bad apples causing hiccups in the process. This might sound a bit contradictory, but before we dive in, let me be super clear. I don't have any kind of financial background. I'm not here to give financial advice, and you definitely shouldn't make any buying or selling decisions based on what I say or write. Now, on to the headline from yesterday. I haven't had the chance to talk about it yet because I've been sick, which has really slowed me down lately, including yesterday. I just put out one video, and honestly, there's no way I can keep up with everything happening right now, but this is a really big deal. Yesterday, something huge got approved. A multi-coin fund is being converted into an actual ETF. To clarify, this would be the first time in the US that XRP is purchased through an ETF. Here's how it works. Customers, in this case of Grayscale, would buy the ETF, and for the first time ever, XRP would be purchased as part of a spot ETF. That's historic. Even though it's a multi-coin fund, it's still a major milestone. This news broke yesterday and it's massive. Just to recap, Grayscale, a huge asset manager, got the green light from the US Securities and Exchange Commission, SEC, to convert its digital large cap fund into an exchange traded fund, SECK. The fund is made up of the 5 largest cryptocurrencies by market cap as listed in the CoinDesk 5 index. Around 80.2% of the fund comes from the top players, with Solana making up about 2.7%. XRP holds a solid 4.8% share, while Cardano has a smaller slice at 0.81%. It's not really surprising when you think about it, especially if, like me, you believe XRP is far superior to Bitcoin in every way. What they're doing here isn't just looking at market demand, although that's definitely part of it. Actually, there are multiple factors at play, but market demand is a big one. You can get a sense of that by looking at market cap, which is a key driver in what they're analyzing. They'll use that data to figure out how to prioritize and weigh investments, basically ranking things to decide their next steps. So here's the thing. When you look at Bitcoin at 80.2% and XRP at just 4.8%, it's easy to forget how far XRP has come. Not too long ago, XRP wasn't even included because it was under fire from the US government. Honestly, I can't pinpoint exactly when things change because, let's face it, the days and months all blur together. But I still remember recording a video when the news broke that XRP had been added to the Grayscale Digital Large Cap Fund. I was so excited and said, guys, you know what's coming next? It's going to become an ETF. And here we are today. We've hit that milestone. It's pretty amazing to see how far things have come. Nate Garachi is definitely celebrating this one. As the president of the ETF store, he shared his excitement, saying, biggest news of the day, in my opinion, XRP is now accessible to everyday investors through the Grayscale Digital Large Cap ETF. After nearly 5 years of legal battles between the SEC and Ripple, this is a full circle moment. Now anyone can easily invest in XRP through an SEC regulated vehicle. Wow, it's kind of wild to think about, isn't it? So many of you have been here as long as I have, or even if you haven't, you've been around for years and you've seen all the ups and downs over the last half decade. Moments like this really make me stop and reflect on everything we've been through. I just keep thinking we were right and we made it. It's such an incredible feeling. Let's be honest. We took a big risk holding on to XRP. What if we were wrong? What if something major went wrong in the US? Sure, the XRP ledger is decentralized and would carry on, but what if things took a turn here and we got left behind? That could have happened, but it didn't. Here we are, and honestly, it's just wild to see the government finally embracing this. And XRP is actually playing a key role in all of it. Nate Garachi pointed out something really significant here. It's crazy to think how XRP went from being constantly attacked to now being front and center in such a big way. Truly amazing. In another post, he hinted at where this is all headed, mentioning individual spot XRP along with a few other coins. It feels like that's coming next, and honestly, the odds seem pretty high. Oh, and speaking of exciting news, check out this headline from Cointelegraph. Analysts have raised the chances of Solana, XRP, and Litecoin ETFs being approved by the SEC to a whopping 95%. It's incredible to see how much progress is being made in the crypto ETF space. Bloomberg's ETF experts Eric Balchunas and James Zafart just shared an interesting update in an X post on Monday. They've boosted the odds for several altcoin spot ETFs, including XRP. According to Zafart, we're expecting a wave of new ETFs in the second half of 2025. Sounds promising, right? In fact, as you can see here, they're putting the chances of XRP's approval in 2025 at an impressive 95%. But here's the catch. If the odds are so high, why are things slowing down? It's not just XRP feeling the impact, but it's definitely part of the story. The headline worth noting here, the SEC has paused Grayscale's large cap fund conversion for review just a day after it received staff approval. It really all boils down to a couple of bad apples, and we can probably guess who they are, right? Let's dive in. The U.S. Securities and Exchange Commission SEC leaders are taking a closer look at their recent decision to approve Grayscale's push to turn one of their funds into an exchange-traded fund ETF. This came out in a letter dated July 1st. Here's what happened. The SEC gave Grayscale the green light to uplist its digital large cap fund, GDLC, which holds $755 million, zero cents, in Bitcoin, ETH, XRP, Solana, and Cardano into an ETF. But here's the kicker. This wasn't a decision made by the SEC's commissioners. Instead, the approval was handled by the agency staff through delegated authority. The agency staff with the authority gave their approval, staying well within the limits of their power, and everything seemed fine. But then, based on what I'm seeing here, it looks like at least one commissioner stepped in and said, hold on, not so fast, we've got an issue. And if we're being honest, it's probably one of the two Democratic commissioners who've consistently taken an anti-crypto stance over the past few years under the Biden administration. It's pretty much expected at this point. It's likely one or maybe even both of them. Here's the deal. This letter is to let you know that under Rule 431 of the Commission's Rule Practice 17, the Commission has decided to review the delegated action. The letter sent to the New York Stock Exchange states that according to the rule, the July 1st, 2025 order is on hold until the commission decides otherwise. So we're in a bit of a waiting game now. Someone raised an issue and we got to wait to see what happens next. The SEC also mentioned it'll let the New York Stock Exchange know about any updates or decisions they make. Let's get them out of here. If the goal is to destroy an entire industry, it's time to move on. Actions like these are seriously impacting people's lives. Any commissioner at the SEC has the ability to request a review of an action. In the past, for instance, commissioners have asked to revisit ETF disapprovals. As for this case, the letter didn't specify which commissioner or commissioners made the request for a review. Any guesses? All right, this is one more point I want to touch on here. I really think this all comes down to just a few bad apples, maybe one or two that caused the issue. Sure, there could be more troublemakers at the SEC, and honestly, that wouldn't shock me. But here's the thing. No matter what, they're not going to derail the momentum crypto has now. The tide is shifting in a pro-crypto direction. The only way they could really stop it would be if an anti-crypto administration came into power and tried to undo everything. Even then, once the crypto ecosystem is fully established, it's going to be tough to take it down. By that point, there will be too many people with a stake in its success, people in influential positions too. Once it's all built out, tearing it down will be nearly impossible. The reality is, what's being built in the crypto space is here to stay. Even if an anti-crypto regime takes charge in the next few years, which is totally possible, good luck trying to shut it all down. It's not as easy as it was a few years ago, and it's only getting harder. That said, there are plenty of people working to move things forward. For example, Here's an exciting headline. U.S. regulator considers simplified path to market for crypto ETFs. Apparently, the SEC is looking into creating a streamlined approval process for crypto exchange-traded funds. This could automate a big chunk of the process, making it way easier to get these ETFs to market. Under the proposed changes, ETF issuers might no longer need to go through the hassle of filing 19B4 applications, the form submitted to the SEC before listing a financial product on exchanges. Instead, according to crypto journalist Eleanor Tarrant, issuers could simply file SEC Form S1, the initial listing registration, and wait for 75 days. If the SEC doesn't raise any objections during that time, issuers would be free to list the ETF. This would cut down on the back and forth between fund managers and regulators, making the process much smoother. If this change goes through and it still has to be publicly announced and implemented, it could actually make things easier. That's right, we'd see less red tape and fewer roadblocks for getting more crypto ETFs approved. And honestly, wouldn't that be a win for everyone? Here's hoping it happens. Here's the deal. At the end of the day, I really don't think this is going to get blocked. Sure, it's a process, and I don't know how long it's going to drag on, but I'll keep you updated as things unfold. From where I'm standing, it just doesn't seem like there's enough momentum or support to stop this from going through. Even on the commissioner side, I don't think they have the votes for it. This feels more like a delay than a full stop. Whether it takes days, weeks, or even a month or two, it's moving forward just slower than we'd like. Once I have all the details, I'll feel completely confident. Right now, I just haven't seen any solid information on it. That said, there's no stopping this. I think there are a few commissioners out there who are ideologically opposed to crypto. They don't get it. They're holding things back. And honestly, it's frustrating. But here's the thing. They're not going to win. Crypto's here to stay and progress is inevitable. In the end, we're going to see this move forward. Not only will this ultimately happen, but I'm confident we'll eventually see a spot XRP ETF approved too. You can mark my words on that. And honestly, I wouldn't be surprised if it happens this year. Of course, just a reminder, I'm not a financial advisor, so don't make any financial decisions based on what I say or write. Always do your research. Seriously, that's the smart thing to do.